How billionaires protect their wealth amid currency decline. Introduction to the dollar collapse warning. The US dollar, like all other fiat currencies throughout history, is ultimately backed by trust. However, this trust is slowly eroding. History reveals a repetitive pattern where empires and their currencies inevitably fall due to unsustainable debt, excessive money printing, and poor fiscal management. The decline of the dollar will not be an instantaneous event, but rather a gradual process, following a familiar cycle observed in the decline of previous global currencies such as the Dutch guilder, the British pound, and the Roman denarius. Footnote: the US dollar's decline follows a similar historical pattern seen with other global reserve currencies, marked by slow erosion of trust due to fiscal mismanagement and debt accumulation. The slow erosion of fiscal discipline. Every currency in history has eventually lost its status not because of external forces but because of internal dynamics. The rise of deficits, the continuous reliance on credit, and policies focused on short-term gains weaken fiscal discipline. Governments, unable to repay debts through normal revenues, resort to printing money to fill the gap. This results in a devaluation of the currency. The Roman denarius, once a strong silver coin, was debased over time as emperors added cheaper metals to finance wars. This led to inflation, instability, and eventually, a loss of trust in the currency. Footnote: the Roman denarius, once a strong currency, was debased by emperors to finance wars, leading to inflation and a loss of trust, a pattern that is repeated throughout history. The rise and fall of reserve currencies. The process of a currency losing dominance is gradual. The Dutch guilder, for example, was once a powerful currency backed by trade and innovation, but it weakened as wars and debt accumulated. This shift gave way to the British pound. Similarly, after 2 world wars and massive debt accumulation, the pound sterling declined, making room for the US dollar as the new global reserve currency. However, after the US severed the dollar's link to gold in 1971, the dollar was left to rely solely on trust, a trust that is now under pressure. Footnote: historically, dominant currencies such as the Dutch guilder and the British pound lost their status due to debt accumulation and fiscal mismanagement, paving the way for the US dollar. The debt cycle and the dollar's decline. The US is currently experiencing the later stages of the long-term debt cycle. Debt levels are at record highs, and interest payments are consuming a significant portion of the budget. The US government's primary response to managing this debt is to create more money, rather than raising taxes or cutting spending. When money is created at a faster rate than the economy grows, the currency loses value, which leads to inflation and a loss of purchasing power. Footnote: the US is facing unsustainable debt, with increasing reliance on money printing, leading to inflation and erosion of the dollar's value. The global shift away from the dollar. We are witnessing the early stages of the dollar's decline. Central banks globally are reducing their dollar reserves, and trade is increasingly being settled in currencies other than the dollar. This shift is subtle but significant. The decline of a reserve currency is a slow process, and when the trust in the dollar weakens, global actors begin to seek alternatives. This process can take decades, as seen with the British pound, but the signs of the dollar's diminishing dominance are evident today. Footnote: the decline of the dollar's dominance is reflected in global central banks reducing their dollar reserves and trading in other currencies, signaling a slow shift in the financial system. Inflation, currency debasement, and erosion of trust. Inflation occurs when the government creates more money than the economy produces. The consequences of this inflation are subtle at first, but over time, they lead to rising costs of living, widening wealth gaps, and a decrease in the purchasing power of money. This process erodes the value of savings, pensions, and bonds, creating a hidden tax on the public. The decline of the dollar, much like other currencies in history, results from an overproduction of money, which weakens its value over time. Footnote: Inflation caused by excessive money creation erodes the value of the currency, leading to a loss of purchasing power and impacting savings, pensions, and bonds. The billionaire's strategy to protect wealth. The most successful investors understand that wealth preservation isn't about betting on a specific currency or economic system but about diversifying and holding real assets that retain value through economic cycles. Unlike currencies, which can be printed and devalued, real assets like gold, real estate, and cash flow generating businesses maintain value regardless of currency fluctuations. Billionaires think in terms of long-term, generational wealth, and they focus on the assets that have intrinsic value, not promises or paper-backed assets. Footnote: billionaires protect their wealth by diversifying into real assets that maintain value regardless of currency fluctuations, ensuring long-term wealth preservation. Adapting to the changing economic environment. In times of economic uncertainty, the key to surviving and thriving is not predicting the future but building resilience through diversification and adaptability. Those who thrive are not those who make the most accurate predictions, but those who prepare for multiple scenarios. A diversified portfolio, exposure to assets that perform well in inflationary, deflationary, and growth environments, and the ability to adapt as conditions change are essential for navigating the challenges ahead. Footnote: resilience in the face of uncertainty comes from diversification, adaptability, and preparing for multiple economic scenarios, rather than relying on predictions.